What's happening, Organigram traders and investors? It's Rod with Power Group. Welcome back on the Pursuit of Wealth. Today is Thursday, July 14th. Hope you're well today. It was a wild day in the markets. In this short video, going to be discussing Organigram, ticker symbol OGI on the NASDAQ. They had record revenue today. They reported earnings this morning before the bell. They beat earnings estimates for both EPS, earnings per share, and revenue. The stock was down and it lost the daily uptrend, and then it recovered with some sector-wide news with regards to the Senate dropping a bill next week. We'll take a look at all that and more. We'll do some technical analysis at the end and what my thoughts and opinions are on the stock in the days and weeks ahead. Before we get to that, though, make sure to smash the like, help support me, and the channel doesn't cost you anything. If you're new, you can subscribe and tick the bell to be notified on any future videos. Taking a look at the article here, so Organigram Q3 revenue increases 20% sequentially to 38.1 million. And like I said, a huge beat in terms of revenue and EPS. We were expecting 33.84 million from analysts. Came in at 38.12, and EPS was a negative 0.02 estimate, and it came in at negative 0.008. And in order to get the earnings per share, you just go down here to their net loss, and it says right here, net loss was 2.8 million, and then you divide it by the shares. Keep in mind that this is in hundreds of thousands, so this is actually 313 million outstanding common shares. If you take the loss, divide it by the shares, that will give you negative 0.008, and it's negative because it's a loss, right? So when you do the calculation, it'll just be 0.008, but because it was a loss, you have to add a negative in front of it. But very close to ending pretty much in the profit zone, so in profitable growth in terms of operations. So the fact that they are very close to EPS positive just reiterates the fact that the days of unprofitable LPs are extremely numbered, and we're starting to see that across a lot of our LPs in Canada, licensed producers. And OGI has really been making a stride and a comeback. Well, they've been really gaining market share from a lot of our tier one names, and they're right up there with CGC, they're right up there with Canopy, right up there with Tilray, and they've actually been clawing back a lot of market share over the last couple of quarters. And you can see that their earnings have just been on a steady, nice revenue growth here. You got 20, 24, 30. Last quarter was 31 million, and then another big jump to 38 million. And like I said, record revenue for OGI. So congrats to the OGI Bulls. Like I said, we were down today. The market, the reason why I think we were down on OGI to begin the day was because we had weakness in the sector, we had weakness in the broader market, and OGI really didn't have any clear support nearby, and we lost key support there at $1, and we lost the daily uptrend, and we started to see a bit more downside. And then we had this news that dropped: MJ decriminalization bill teed up for Senate introduction. So Senate Democrats plan to introduce a bill to decriminalize MJ at the federal level next week, a person familiar with the matter said. Although the legislation faces long odds in the evenly divided chamber, we know that they need 60 votes. And again, we knew to be expecting this at some point in August. It was tentative for the second week of August, but we'll see if this can come out next week and trap some shorts. This also lines up well for a potential local bottom being set on the S&P 500. I do think that we could be entering a multi-year bear market on the S&P in tech stocks, but we are searching for a bit of a local bottom here before we see a weekly and a monthly lower high, in my opinion, on the S&P 500. That would bode well for MJ Bulls because we would have tailwinds at our back from the broader market. And today we actually broke out of this equilibrium pattern on the S&P 500 bearish. So again, I think that's why we had a lot of selling pressure, and because the overall MJ sector was weak to start the day. But then we had a huge move. Tilray popped about 22% on 1 hourly candle. Trapped a lot of shorts, I'm sure, on that one. But you can see here on the OGI chart, this is again on the NASDAQ, so all prices mentioned are in US dollars. We had the low, the high, the higher low, and a higher high. Wasn't much of a daily higher low, though, and it was a daily bull flag. But when we came down today and we lost that key support at $1, which was our daily higher low, that was the loss of the daily uptrend. And then we had a huge lower wick. We could even see an EMA 12 and 26 bull cross leading into tomorrow, which would mean more upside from here. We had decent volume today as well on the daily time frame, and we're still nowhere near daily overbought territory. So I think that we could be due. We may even see a gap up tomorrow in MJ stocks. We are due for hourly consolidation, though, on a lot of our names. So don't be surprised if we do see hourly consolidation. What I think the most likely scenario is we gap up tomorrow and then we start hourly consolidation. Because as we know, when we're beaten down this bad, this is when things pop when you least expect it. And that's what I said. Watch for something like safe banking. There's talks about getting that added to the defense bill as well. Just think about all these things lining up, right? If we see Schumer and the Senate drop a bill next week. We see potential safe banking added to the defense bill. We see New York coming online with recreational sales at some point soon into the fall. We have elections into the fall, and then we could see Germany coming online as well. There's so many bullish catalysts. We have New Jersey numbers that are going to be coming in soon as well. So tons to look forward to. But again, we know that we need to change. Bulls prove absolutely nothing until we change weekly and monthly uptrends. And at the moment, it's still just a weekly bear flag on OGI. And we need to get over that 112 resistance. If we can get over that, that's going to decrease the odds that we see another leg down. But again, the S&P 500 still unable to confirm even a daily uptrend. So a little bit of a red flag. We need to be prepared for one more leg down. I think there is about a 60% chance that we see another leg down and about 40% chance that the bottom is in. That's what, that's just my personal opinion, not financial advice. Do your own research, just for entertainment purposes only. I'm not telling you to buy, sell, or hold, but personally, this is a great time to be loading up. And like I said, I've always said, I don't need to nail the bottom. I just want to be buying near the bottom, right? And there's a good chance that if you buy here, we may see another leg lower, and that's just another opportunity, in my opinion, to buy the dip and dollar cost average. So that's my strategy. Again, I don't try to nail the absolute bottom. I just look to add and dollar cost average as we're nearing a bottom. But again, on the weekly time frame, we're starting the weekly bounce, but we need to come up, form a weekly higher low and a higher high. And then we still need to zoom out to the monthly time frame and do that because we're in a monthly downtrend here as well. So then we need to start the monthly bounce, followed by a monthly higher low and higher high. And then once we're in a monthly and weekly uptrend, we'll be back in a bull market. And I do think that the next bull market in MJ is going to be absolutely electric. In terms of the weekly time frame, we have the 10-week moving average there at 108. And we also have the 50-day moving average there at 111. So we'll say 110 is going to be very strong resistance in the short term, in my opinion. But if we can close this weekly candle over 108, that's going to signal a huge momentum shift. And we have bull crosses happening here on the MACD and the weekly MACD and the stochastic. So that is very, very positive in terms of our weekly macros. If we take a look at our weekly moving averages, you can see here we almost had a bull cross of the 50 and the 200. We had a death cross back here in May of 2020. And when that happened, we saw a lot more downside. And then here we are gearing up for a potential bull cross. That just means when the shorter term moving averages are above and then cross downwards, that's a bear cross. And then when it's below and it's crossing up through, that's called a bull cross. And because it's on the weekly time frame, it means we could see a lot of upside as a result. And then in terms of the daily moving averages, we had a death cross back here in September of 2021. And we saw a ton of downside from there. And now we could be gearing up to get back above that 50-day moving average, the 10-week moving average, and then target the 100 and the 200-day moving average. And we could even see a golden cross occur at some point over the next couple of weeks and months on the daily time frame. That's just when the 50-day moving average crosses above the 200-day moving average. We refer to that as a golden cross. All right, going to end it there. Thanks again for joining us on the Pursuit of Wealth. Let me know in the comments below if you would agree with me, disagree with me. Always love hearing from you. Going to end it there. We'll see you again on the next update. Have a great night.